Today's topic is data center REITs and looking at hyperscale AI demand as a publicly traded REIT. So in a previous video, we talked about data center REITs and investor relations, and that valuation is really the intersection of two key variables in this space. And the first is the availability or the amount of speculative building projects that are going on in the market. Speculative means that there's no signed tenant, but you're building the building in the space and the power. The second piece is the demand trends for space and power among the hyperscale and AI players in the market. So if you're an IRO or you're trying to sell this or position this to public investors, there's two data sets you want to look at. The first is the CapEx forecast for these hyperscale AI developers. And the second is third-party data sets. My favorite is Data Center Hawk from David Liggett. We used this when I was at DFT. It's a great data set on absorption in the key markets across the US and the world. So let's get into first the hyperscale AI demand. And one of the biggest issues, especially for generalists, is that the size and sheer demand for these tools is hard to grasp because it has just proliferated so much so quickly. It's hard to really say, oh, I understand the size of this. And secondly, there is a great data set that illustrates this that's publicly available that you can get from a Google search or a Gemini or any AI search, which is the CapEx forecasts across the hyperscale AI players that are public and private. So let's dive into it. When you look at this CapEx estimate for FY26, we're currently sitting at about 650 billion, which is up from 575 billion prior to the fourth quarter. 650 is where we've come out of fourth quarter earnings. So let's look at a quick assumption. One data center is equal to 28 megawatts, and at $22 million per megawatt, that data center costs $630 million. So now let's look at a sizing opportunity for demand in the data center REIT space. So we take the 650 billion CapEx estimate among the hyperscale and AI, and that says that we need 1,032 data centers based on that 630 million cost, which translates into about 28.9 gigawatts of energy. Again, gigawatts. We need 28.9 Marty McFly DeLoreans to power the AI and cloud that we want in FY26. So, all right, the enterprising investors are going to say, Steve, well, they're not going to spend all 650 on data centers. So let's cut it in half and see what that does to the demand for space and power among hyperscale AI. So that means that the CapEx forecast goes to 325 billion. And then based on the $630 million per data center, we need 516 data centers or 14.4 gigawatts of energy. Again, we need 14 or 15 Marty McFly DeLoreans to power the innovation that's going on in 2026 alone. And this is the key. Like, this is 14.4 just for 26. Theoretically, you multiply this by 5 to get the most bullish number of what demand looks like for the next 5 years. And this is what is the key if you're an investor in this space. As long as hyperscale AI is innovating, there will always be demand for space and power, and it will always get absorbed by the market. The inflection point you're looking for if you want to be negative on data centers is a stop or a deceleration in innovation around AI and the cloud. Thanks for watching.